Hello everyone. This is the pre-market report video for today, 25th July 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, about last night US market, S&P released the July month PMI projection data. Manufacturing PMI came as 49.5 against expectation of 52.7, which is bad. However, they projected the really good service PMI data 55.2 against 53 expectation. Since in the US economy 70% consists of service sector, so this PMI projection is mildly positive. In addition, there is a US-Europe trade deal optimism. So the global momentum is okay. However, there are some weakness in the stock specific, like United Health Insurance fell 5% as they are under some US government investigation. Then because of poor quarterly results, IBM fell 7% and Tesla fell above 8%. On the other hand, Google posted better results, so it increased 1%. So last night US market price action was not momentum based, rather it's driven by stock fundamentals. In the end, Dow Jones decreased 0.7%, whereas S&P 500 closed near flat and Nasdaq increased marginally 0.18%. In case of VIX, it didn't change much, same 15.4. About oil, same as last 3-4 days, didn't change much. At the time of this video, WTI crude trading around 66 US dollars per barrel and Brent crude closed little above 69 US dollars per barrel. Hence, so far it's not bad and not good either. But when we see the Indian ADR, it's disaster. All of them closed negative. Infosys is the major dragger, down over 4%, more than the Indian market. Wipro ADR down around 1.5%. Hence now both the IT stocks showing fresh negative arbitrage of 1 to 2%. Then banking side, it is also down between 0.5 to 1%. So it also having some negative arbitrage. Then coming to GIFT Nifty, after the Indian market close, it continued to slide further and early morning today it was down even further and traded at 24,968. So equating that with our spot market, it's indicating above 100 points gap down opening. Honestly, I don't know why GIFT Nifty was falling. I'm not sure, but thinking it's something to do with India-UK trade deal, since that's the only thing happening now. In fact, our Commerce Minister Piyush Goyal said that he's confident of India-US trade deal, which is really positive, but he said potentially in the middle of August. So again, I'm not able to find the answer why GIFT Nifty is so negative, or maybe it's just a trap for retail traders. Anyway, it's the status. About institution, for the fourth session in a row, FI was significant net sellers. I mean, in this week alone, they net sold for over 10,000 crore rupees and yesterday alone net sold for 2,100 crore rupees. On the other hand, DA net bought for 2,600 crore rupees. Then moving to the derivative market, due to weekly expiry, yesterday 39% of put options and 23% of call options were unwound or expired. Then based on the remaining open interest position, roughly we are back in the same place as last Friday morning position. Client or retail traders having net 11.7% of their open interest on the bullish position. On the other hand, both FII and DII each having net around 5.5% open interest on the bearish side. Here, retail traders are net sellers on both put and call options. So again, they are expecting the range bound movement with positive bias. On the other hand, proprietary traders net sellers in call options and net buyers in put options, meaning they are expecting the range bound on the upside, breakout on the downside with some negative bias. Finally, FIIs net buyers on both put and call options. So we could say they are expecting the breakout but makes more money if market goes down. Here, because this week is monthly expiry, we need to give importance to future market as well. In case of index futures, FII is holding 85% of their open interest on the short side, whereas retail traders having 67% on the long side and proprietary traders also having 56% on the long side. Please note, here I am not recommending any, I am merely explaining who having which position. Also, today and Monday, we will have the fresh position build up. As a summary, global momentum and US market is same as like last 2-3 days. It's positive, but Indian ADR and GIFT Nifty showing some weakness and indicating the gap down opening. One more thing, yesterday in US, Sun Pharma signed the antitrust litigation agreement that they're going to pay 200 million US dollars. So we could say Sun Pharma will be on focus today. Moving on, yesterday as per stock open interest, Coforge 361, Persistent System, CG Power, SBI Card, Nestle India and Tech Mahindra are some of the 84 stocks that got an increased open interest along with a negative close, indicating the short build-up. On the other hand, Indian Bank, Mankind Pharma, Amber Industries, Union Bank of India, Page Industries and Bank of India are some of the 19 stocks that got an increased open interest along with a positive price close, which means these stocks got the long build-up. About the things to look out, today Shriram Finance, Bajaj Finserv, Cipla, Bank of Baroda, Laurus Labs, SAIL and SBI Card are some of the companies to release their earnings. Then tomorrow, Kotak Mahindra Bank, Lodha Developers, IDFC First Bank and Whirlpool are some of the companies going to release their earnings. In terms of macro, today early morning, Japan's consumer inflation data is due to release. Then during our market hours at 11:30 am, UK retail sales data and at 1:30 pm, Germany's business climate index is scheduled to release. And in the aftermarket hours, Indian Bank's bi-weekly credit and deposit growth data and then for US durable goods order are some of the items we need to keep an eye out today. Coming to technical, Nifty opened with a 25 points gap up but dropped near 100 points in the first hour. Then the decline continued until near 25,000 mark and in the second half it moved sideways and closed at 25,050. Thus on the daily chart, Nifty formed the long bearish candle with a minor lower shadow, and if we combine the previous Wednesday candle together they formed an bearish engulfing pattern which is negative. In addition, it still could not able to fill the correction gap that Nifty formed on July 11th. It dropped below the 20-day exponential moving average and both RSI and MACD momentum indicators got the negative crossover, all kind of negated the 2 days potential bullish reversal. So until the July 11th gap filling, I believe market expects to consolidate. On the upside, 20-day exponential moving average zone 25,150 to 25,200 is the immediate resistance. Downside 25,000 mark is the psychological support. Breaking below the recent low 24,800 to 24,850 zone expect to provide a good support. In case of Bank Nifty, it was not bad like Nifty. I mean, it too from 57,300 dropped all the way down to 56,850, but it managed to recover some and closed above 57,000 mark. Thus on the daily chart, Bank Nifty formed the medium bearish candle with lower shadow. But on the positive side, it formed the higher high formation and the fifth consecutive session higher low formation. In addition, it managed to stay above the Bollinger Band middle line and above the 20-day exponential moving average. Hence, both Bank Nifty and Nifty having the contrasting technical indication. Anyway, as per Fibonacci series, the support is at around 56,730 and the immediate resistance is at 57,400. Then on the options front, the maximum call option open interest was at 25,500 strike, followed closely by 25,200 and 25,400 with new call option writing at 25,200 followed by 25,100 and 25,300. Then on the put side, the maximum open interest was at 25,000 strike, followed closely by 24,500 and 24,800 with new put option writing at 24,800 and then 24,600 and 24,500. Thus, from options data, it's suggesting strong resistance is at 25,300 to 25,400 level and support at 25,000 to 24,900 zone. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.